2025 has truly been a year of two halves for M&A. The year began on a high note with inflation and interest rates trending downward, a pro-business deregulatory environment, and the election of new leaders in several major economies brought renewed focus on economic growth. Of course, this optimism was challenged in the second quarter of 2025 with the introduction of US tariffs and the response of the impacted economies to those tariffs, and consequent concerns about a global trade war. Despite these headwinds, the second half of 2025 saw a resurgence in deal-making activity, with the consequent outcome that 2025 will be a record year for transformative transactions, driven mainly by M&A activity in the second half of 2025. 6 themes shaped the market in 2025 and are expected to continue to impact the market significantly in 2026. Firstly, the surge in deal volumes during the second half of 2025 was driven by mega deals from both strategic and private equity players. While we anticipate continued momentum into 2026, the pace may moderate somewhat, especially in the second half of 2026. With ample capital availability and strong bank and private credit balance sheets, this environment is expected to further improve with the loosening of capital provision requirements in the US and UK for lenders. Political leaders in the US, UK, India, China, and Japan have prioritized growth and deregulation. If these leaders deliver on their agendas, we can expect to see continued support for M&A activity into 26 and well beyond. Private equity sponsors deployed record levels of capital in 2025, monetizing aging portfolios and seeking new transformative assets. With significant dry powder still available, private equity is well positioned to support a strong M&A market in 2026. The imperative to acquire AI, cloud security, and digital infrastructure capabilities is now at the top of the boardroom agenda. For many companies, M&A is the fastest route to digital transformation, and we expect to see more deals with an AI focus across all sectors. Corporates are increasingly focused on portfolio optimization, scale, and resilience, particularly in response to ongoing geopolitical risks and the broader trend towards deglobalization. The outlook for 2026 is positive. Inflation and interest rates are expected to continue to moderate, capital remains abundant, and the deregulatory stance in major economies is likely to persist. All of these factors point to another strong year for M&A, perhaps not quite matching the exceptional activity of the second half of 2025, but still very robust by historical standards. Norton Rose Fulbright will continue to monitor and comment on trends in global M&A through the year. So, look out for our articles on topics impacting M&A with our M&A Outlook series, and later this year when we publish our annual M&A Risks and Trend Survey. Thank you very much.